got one for today. So I got done with my prostate exam. Doctor walks out of the room. Nurse walked into the room and said 3 words that changed my life forever. She said, "Who was that?" I actually laughed when I heard that one. Hey, welcome to the Closing Beat. Happy Wednesday. How we doing out there? Hope you all are having a good day. All is good here. The stock market is higher, at least 2 days in a row. Huh? Some of you will take that there. Welcome, by the way. We're financial advisors here at Jazz Wealth. We're a little offbeat. That's why we call ourselves Jazz Wealth. That's one of the reasons anyways. Hey, tomorrow, Wine and Wealth. Looking forward to it, getting ready for it. We have the biggest announcement any advisor has ever announced for their clients, for the average person. So I'm looking forward to that. That'll be tomorrow night, 8 o'clock Eastern time for clients in the dojo. Anytime we're live, by the way, you go in the dojo, if you happen to be in there, there's a little red button that's just blinking to let you know something's going on. Hope you'll check that out. Anyways, I got to make this one a little bit quick today because I got a meeting in the Tampa office, so I got to go take care of some things. Yeah, I think we're good to go. Let's lock and load. Off to the right, you can see the stock market's performance for the day. The Fed raises rates. Are you shocked? Right? Pretty much knew that was going to happen. They did a great job of actually letting people know, look, it's a quarter point. That's what's happening, right? There's no chance of anything higher or lower or whatever. It's a quarter point. So basically everything was priced in. The market can continue trying to respond to maybe some good news, well, at least initial progress on negotiations in Russia and Ukraine. Not so much good news over in China, but good news for the price of oil, which has helped our stock market go higher. A lot of jello moving on a plate at the moment. It's the first time that the Fed's raised rates in 4 years, actually. It only took, 8% inflation? And Cody had a good comment there earlier. He said, well, now it's a quarter point. Now they can cut rates if they have to and not go negative, so we'll see what happens there. That's about it for the Fed. I don't know what else to say. The market's pricing in for their, the Fed does a target range. So they'll currently, prior to today, the range was 0 to 0.25. They have a lower part of the range and an upper part of the range. So now they're at the upper end of their target. And I think if you were to look it up, they call it the Fed target, upper target limit, lower target limit. And so this year, the market's basically priced in that the upper limit will be 1.75. The lower limit will be 1.5. So it gives you an idea of how many rate hikes it would take to get there or how many quarter point rate hikes it would take to get there. That's up from 0, right? Now remember that the general sort of economic thing, the reason that the Fed raises rates is to try to slow the economy. That's the big reason, right? They don't want things to run too hot. They don't like when everything gets out of control too fast. We get all too excited. Money moves too fast. They want to slow that down. Rate hikes cannot fix supply chain issues. It cannot immediately fix inflation. It can't fix gas prices. It can't fix oil, the price per barrel. So all they can do is try to slow the economy down. And they made it clear today, we are going to attempt to do that, right? And so, like they said it, right? So they're going to make those moves. Anyways, if we look over the S&P 500 today, we're moving back to the top of the downtrend. I was worried about it a couple days ago, this day in particular, right there last week, where we rallied up and could not muster up enough courage to start making our way back. Well, it was just a couple days behind. The market's a little bit slow, apparently, because now we're starting to move back to the top of that downtrend. And you would not expect, unless there's world-changing news tonight, you would not expect that tomorrow would be a magnificent, huge rally back up here. This has been an incredible, you would say, volatile or momentum type 2 days. To put it in perspective, right? Think about this for a second. In 2 days, just the last 2 days, today and yesterday included, the stock market has moved more than its all-time historic 6-month average. In other words, if you look back through the entire lifespan, 1929, all the way to 2 days ago, that entire lifespan, the average 6-month performance is exactly the same as what we've seen over only the last 2 days. So if your portfolio has been wiggling around quite a bit, now you know you've done 6 months worth of work in 2 days. That's freaking incredible there. Anyways, that's good news for people that want the markets to bounce a little bit. The NASDAQ did the best out of all of them, trying to break through this downtrend. It is the first to attempt that. We mentioned that the other day. It's the steepest, so therefore being the first is totally expected because it was a much tighter and steeper downtrend there. Even the Russell 2000 got in on the mix today, but Nothing changes here, all right? So you've got your downtrend. I'll just stretch this line out a little bit. Here's your short-term area to fight. It's going to be right here, basically right where we're at today, just over 2040, right in that area there. Anything above that, you don't have clear skies ahead. You've got 2100 in the mix there, so as far as acting as a resistance area. So really tough area for the Russell in terms of having the highest probability of a biggest move. It's just not likely there for the Russell. We'll see what happens going forward. What else do we have here? Gold, not much in the way of gold today. Kind of a quiet day, wider range, but it finished up down just a little bit on the day. Oil continues to move down just a little bit, another 1% lower. We're down at $95 a barrel. Here's something we can all agree on. You know how I always picture it like Washington, like they pull off the thing from a grenade and they throw it into the U.S. When they think of topics. So you notice how there'll be a topic that we're all fired up about for a while, and we're all walking around going, I don't know why I'm fired up about this. And there's some sensitive subjects, defund the police and race and all that stuff, where it just feels like they go, here, give them that to talk about for a while, and then we all go crazy, and some like each other and some fight each other. Well, couldn't we all agree on the fact that the national average for gas prices is actually 2 pennies higher than where it was before we started all this mess? So gas prices go up for 1, 2, 3, 4, 5, 6 days. There was this exponential parabolic move in oil. Gas prices rocket up. Gas prices rocket back down to before where they started, below where they started, and the gas prices are still high. Could we all like rally around that? Could we protest about that? You know, like I think we can all agree there. Something's a little fishy, right? I don't know. It seems a little odd to me. Anyways, that's my frustration. You've got oil prices headed back towards the 50-day moving average. Remember, you don't buy the first dip after a parabolic move. That's your sort of lesson of the day. Elsewhere, you've got the VIX pulling back just ever so slightly. That's good news there for volatility. You wouldn't notice volatility dying down over the last 2 days unless you were looking at the VIX. If you were looking at your portfolio, you were like, well, I don't know what's going on, but I'm happy to see this. Elsewhere, you got semiconductors. Let me go over here. Really, I'm just going to skip a lot of this and just say everything bounced today besides a handful of names that were news-related. Johnson & Johnson, Merck, consumer staples. Walmart had pretty much a flat day. Coca-Cola had a flat day. Anything, I'll use the XLP to look at it. Anything in this space didn't really participate. And why should it? You would only go over here if you're looking for safety. Everybody was like, I don't know, what do we do? So now if the market's getting better and everybody's more optimistic, they're going to go for the tech stocks and the semiconductor stocks. So they're not going to participate. Also, with the news out from Russia and Ukraine, defense stocks didn't participate today. Here's Raytheon Technologies. You got Lockheed Martin, very steep pullback there. Northrop Grumman's another one, just didn't participate. They continue to pull back. That's not the end of the game for them, just they wasn't their day-to-day. And then energy, right? So with oil pulling back, you got Schlumberger in there, Occidental Petroleum finally taking a break. ExxonMobil a little bit lower on the day, Chevron, same thing. I mean, nothing amazing here. But other than that, everything else pretty much participated. We got one guy down here. What is this? Norton LifeLock, I don't know what happened to them. I didn't look at it today. Big move lower for them. I don't know. Something overseas going on with them, down 13%. But other than that, that's the story of the day. Now, one thing I want to talk about, the Fed wanting to slow the economy. What can you look at? Like, how can you tell if it's working, right? How can you tell if we're headed towards a, smaller or lower inflationary pressures? I can't think of the word. Or stagflation, right? Very popular. People like to talk about that. That's where you have slowing to flat demand for products, but you have high inflation, right? So whenever somebody says stagflation, that's what that means. Anyways, I tried to put together a little something for you to show you. One way to monitor for stagflation is in the following. This is a little bit bunched up. So let's start like this. Go like this, go like this. Try to make it a little bit bigger. All right. When you're looking at the overall supply, right, and you're starting to look at that side, we're going to compare supply and demand. Well, we've got supply is a few ways you can look at it. Manufacturing prices currently elevated, right? Future prices when products are delivered, currently elevated there. Delivery times currently elevated, right? So that would mean more supply is in the market. And then you look at the other side of it. Let me just go like this. I'm just doing it this way because it may be easier to see. Over here, you got new orders. Demand. Is demand higher or lower? The demand for new purchase orders is actually lower. The current level of unfilled orders rising, and in fact is very near all-time highs. So the demand there is very weak. Don't let that line mess you up there. Unfilled orders going up actually means demand is drying off and headed lower. Also, new orders for washing machines and all. They always like to say washing machines and stuff and whatever you're buying out there starting to dry up a little bit. So now you have this recipe for that's actually showing, and the Fed made it clear today they want this to continue. You have a recipe for, well, wait a minute, inflation's higher, supply is higher, demand is dwindling, right? And you can actually track that. So I love when you can take data, take your opinion out of it and go, that's what it is, right? Like that guy on Instagram that he does that stupid face, but we all love it. Anyways, one other thing you can take a look at. We currently have a little bit of a problem, which you might have seen from the other screen there when we were sharing that. We have inventories dramatically outpacing new orders. It's one of my favorite things to look at here. This is the level of inventories as a whole, right? Retail inventories. You don't have to be a rocket scientist to see they're going higher, but the level of new orders is not. It's not going with it, right? We had it, right? So when we had coming out of COVID, we had new orders doing well. We had new inventories rising, but putting a cap on it. Right now, look at that spread. Is that not almost that is the biggest spread we've ever seen in terms of new inventories, new orders, right? So not headed in the right direction there. Something to keep an eye on. We'll be getting more data on that one here soon. All right, moving on. China names. Where are my China people at here today, right? Those of you invested in China stocks, all the name. Where's the chart? Can I go back? Yeah. Alibaba. There you go. I mean, how could you not notice these Chinese names doing well? And I point them out in particular because they've been crushed, right? Any of these Chinese stocks, wherever you're looking, even if you're looking at ETFs like the A shares, that's one popular way. FXI is the other one. They're almost kind of similar. It's like our S&P and Dow, but that's one way to do it over there. Anyways, big moves out of them. You finally maybe have the tide turning here with the actual support of the Chinese government. The Chinese government says we're going to allow ADRs. It's not going to be a problem. Now, it's presumed that news is correct. That news is not necessarily guaranteed just yet, so please keep that in mind. But Alibaba up 36% on that one because they're going to be allowed to continue here. If you look at something like Baidu, what was that? 39%, does even better. They're going to be allowed to continue to trade on the U.S. exchanges here. Well, as long as the U.S. wants them. And for now, nobody's rocking the boat there in Washington, so we're good. JD.com, 39%. Huge recoveries for these. And as long as you can trust that news is, in fact, going to stick and that they're going to hold by their decision there and the U.S. isn't going to come out and say, we don't care if you're going to allow them to trade over here. We don't want you to trade over here, which is not presumed to be the case. You got 56% on Pinduoduo. Impressive in Chinese stocks themselves and impressive in, like I said, the ETFs if you happen to be following along there. All right, what do we got? Office trades here today. We were quite active. Great lesson Monday in office trades. You can join us if you want, jazzwealth.com/research. There's a handful of different things that we do. Look at that. There's an actual little slider thing. Handful of things that we do. Primarily, we focus on what we call office trades, which is just a fun way of doing some day-to-day type trading there, some things you don't get to see. Monday, we talked about defense, and that started to pay off today in a big way. So we adjusted that. Today, we talked about your optimal portfolio profit. How can we tell our current portfolio, and I share it with everybody, you can see exactly what we have. How could we tell if we're taking the optimum amount of risk for the optimum amount of profit? Are we taking too much risk for a tiny little bit more profit? Or are we taking too little risk and we're just not going to make enough? So we went and actually measured that out and showed you how to do that. Then we adjusted the positions accordingly to make that happen. New positions, we started Micron, short position. Starbucks, we started a short position. Fun fact, I believe Starbucks, I didn't take it off or anything. It's already up 22% of the total profit there that we could collect, so that was quick. Las Vegas Sands, we closed out a piece of that position. Pepsi, we closed out that position. Advanced Auto Parts closed out that position. Royal Caribbean, we did get filled at $1.01. We were closing out a position there. And now that puts our office trades in the optimum position for the optimum profit, or better yet, the optimum risk position for the profit potential. So we're not taking too much risk for the same amount of profit, right? Big, big, big time lesson there. I hope you guys get a chance to check it out. All right, what do we call it? New highs, 14 new highs today. All the new highs basically pulled back. There was only one new low. Take a look at Travelers, right? It already went, right? So the stock market was great that it helped it out yesterday, but Travelers is like, what else do you want me to do? I was already higher when the market wasn't higher. So it did take a little break today, but not after hitting a new high. FMC is going to be the same thing, and any of the new highs that you look at today are going to do this right here, right? They're just going to hit that new high. You're going to see that they did take a little break. Cincinnati Financial, which is a fresh breakout, did it before the market took off today. It was like, hey, people didn't want to put new money here. They wanted to go buy the cheap stuff, all that really discounted stuff that was out there, your Etsy's and Alibaba and things that have already fallen over. JB Hunt. Very impressive move for JB Hunt. I don't know if this is a good decision. If you saw the news, I don't know if it's a good decision for the long term. If we know now that the stock market or the economy is going to be forcefully slowed down a little bit by rising rates, but they're basically going to double the amount of containers that they have out there and work with a rail company to help them move those extra containers. So they're expanding into this market right now to try to help the supply chain out. I don't know how good a news that is, right? Is that the right time to be doing that? It's not my business. I just follow along. Gilead Sciences was the only new low today, hit new 52-week lows, and the only one that remains now almost in the entire stock market, the S&P 500, remains one of the only ones that still extended to the downside and just did not participate. So be it. All right, stocks in the news here today. We got Jabil. You got Jabil Circuit, JBL, up 10% on the day. They had earnings, right? So Jabil Circuit earnings come out better than expected. They raised guidance going forward. Very positive outlook for them with the supply that they can get anyways. So if you're not familiar with them, maybe take a look because they had a good day. Johnson & Johnson, New York Times said that their COVID vaccine looks to be working just as well as others. They got a little reputation issue to work through there, but that's okay. That didn't move the stock because it was just a report. It wasn't based on any data that Johnson & Johnson would agree on or has agreed on yet, but that's what you have. Staying with vaccines for a minute, Pfizer says they want, what do they call it, emergency use authorization for their booster COVID vaccine, especially for those that are older. So you had that going on. Starbucks. Guess who's back? Bringing the band back together again. Howard Schultz coming back to be the CEO of Starbucks. This will be the third time, by the way. I don't know if you followed this, but this is the third time that he will officially have been the CEO. What happened was back in when they went IPO'd in 90-something, don't hold me to that, somewhere in 92, 3, somewhere in there. From the time they went from the IPO to about the year 2000, actually, that was right around the time, that's when I got to know who he was. He was a CEO. Then he passed on to another guy. Then the financial crisis hit. He came back, right? Then he retired again because he was probably going to try to run for president. And he did try to run. It just didn't go very well. And so now he's back. That's actually good news for the stock. You can see the stock up 5% on the day. Howard Schultz as CEO, since there's been enough of them over the years, he actually ranks as the best in terms of the annualized performance for the stock itself. The first time he was the CEO, 37.8% in his first tenure from, like I said, 92, somewhere in there to the year 2000. You'd have got 37.8% annualized returns. Everybody else, okay, but not great. The only one that did bad was Jim Donald, which I don't actually remember him. Howard Schultz takes back over during the financial crisis, 22.2% annualized returns. Kevin Johnson, somebody that was the current CEO, 7.4% annualized returns. So it's an optimism revolving around Howard Schultz's magic for the stock price. That's really all I have going on there. So I thought I'd point that out. What else do we have? Tesla. So Tesla had to stop production in Shanghai. Cases are going crazy there, and the more the cases spread, the more they'll shut down China, basically, little by little. So that's some case problems over in Shanghai. They're closing for 2 or 3 days, I think. They're trying to get ahead of the government there and just basically say, we're going to try to knock this out so our area doesn't get shut down for 7 days, because the government shuts you down for a minimum of 7 days over there. Other than that, what else do we have? I'll take your questions now while I wrap things up here so I can move on. Boy, if you saw the Chinese market overnight, I don't know if you watch constantly like I do, that was a big day for them over there, and it was based on those comments. Tomorrow's earnings, you got Dollar General, right? Yeah, Dollar General coming out, Signet Jewelers, FedEx, GameStop, and Steinmart. Steinmart, since going public, has only had one positive result from earnings, meaning they reported earnings and it was up the next day. One. It's not good. It's not the worst, right? Dollar General, over the last 8 earnings reports, has only been positive once as well, but that's just over the last 8. Steinmart, 1. That's it. Just get the 1. All right, anyways, I'll take a look and see if I can answer your questions and be on my way. Richard says, now all we need is a higher high, or a higher low, you mean. You want a higher low from here. A higher high would imply that we went back to all-time highs, which would, I guess, be nice, but I don't know about that one. Philip says, hi, Dustin, what free website may I use to download financials from and into Excel? Don't know. Can you do Google Financial or Yahoo Financial and just connect to them? It's free, but you're not going to get like extreme details there. But other than that, I don't know. Everything that we would be able to pull here, we pay unbelievable amounts of money for, so it's not technically free. I couldn't say, oh, you just go there. It's not free. Charge us an arm and a leg, like your gas prices. What's going on there? 9 rate hike. There was at one point there were 9 hikes priced in. Now we're down to 6 or 5 or 6. Yeah. Hey, all right, got some good boost there on Starbucks. Did you know? Are you friends with Howard Schultz? You knew he was taking over? Yeah. Giovanni, you mentioned Delta portfolio yesterday. What's a good number? How does that work? Your portfolio Delta is 460. Well, if you're trading stock, it's naturally going to be longer, so you're bullishly biased. I was trying to get the problem with our portfolio, when I showed it there in the portal, was that for every % the stock market went higher, we were not going to participate at the same rate. Our profit was creeping off. However, if the market started to fall, we were going to start falling at an accelerated rate. So I was just trying to visually show, let's bring this end up so if the market falls, we don't lose as fast, but let's also try to flatten out this here. So if the market goes up, we're taking less risk for the smaller profit that we were expecting to make. The delta, there's no magic number. The delta is based on your belief. If you are optimistic about the market, you don't mind as high a delta as you can afford, right? If you are like, all right, we had a good move here in the market, I don't know about this continuing, kind of like I was, then we try to flatten everything back out again, which is the reason for the Micron and the Starbucks shorts, to try to do that. What would need to happen for Russian stocks to be tradable again? You want to ride that train back up? I believe everything is pretty much stopped at the moment. RSX, right? That would be your go-to ETF. It is still closed. I don't know. I think this is currently operating in no man's land. They are shuttered until further notice. Careful. If there's a Russian stock you're trading that hasn't been, it's going to be. They're going through them real quick and just shutting them down. I don't know what would open them back up. Couldn't tell you. I'm glad I didn't take that trade. I'd have been stuck in that. Yeah. Lines around Starbucks. We've got those problems here. Yeah. Yesterday and today, the days to buy the dip, or should you still wait? I don't think you missed anything. It's an exciting time. Did you participate in some way, but not a time to go all in. I don't think we'll be proven to see that was the all-in moment. Yeah. Scott, can you talk about the annual rate of returns on your company or customer account portfolios? Thanks. Yeah, actually we can. Oh, well, so if you go back 3 weeks, maybe our Wine and Wealth was public. So I actually went over the returns of everything. And anytime we go over returns, I now know I can make those public because I'm not making recommendations. I'm going over something that you couldn't have participated in. The trouble is if I start saying, I will buy this now, and you participate, now I'm in trouble for making a recommendation to you. But I now know I can go back in time and say, whether it was good or bad, here were the returns, because you can't lose money on that, right? That's what the SEC is worried about. So if start by going back about 3 weeks, if not 4. Here, just look at the videos on YouTube. It was public on YouTube as well, and I actually went through all of them just to give you a little feel for that, or to give you the exact numbers, not a feel for it. You can see it. Eli has been with us for 3 to 4 years. Man, has it been that long? Time flies. I can tell it's been that long. Yeah. All right. I am going to wrap it up from there. We'll be back tomorrow. And of course, if you're one of our clients, you don't want to miss the Wine and Wealth tomorrow. You know I don't hype something up unless I'm super excited about it and it's actually ready, right? There's one thing if you're like, hey, what if we try this? You know, that's something. This is ready. So everything I talk about tomorrow in our Wine and Wealth class, coolest thing any advisor's ever done, it's ready. So we don't have to worry about, wait for our tech team to build it out. It's actually going to be there for you. For the rest of you, I hope you enjoyed our show. We'll be back tomorrow, of course. Keep teaching, keep focusing on everything. I'll be around, and enjoy the rest of your day.